Here's what you need to understand before markets open Sunday night. Silver closed this week above $80. Not barely, above $80 with confirmation. Gold is holding near the $4,700 level. The gold to silver ratio has compressed down to approximately 57 to 58 to 1. And over the past 12 months, silver has posted a gain of roughly 145%. But none of that is the story. The story is what happened while those numbers printed. Iran's parliament speaker, Mohammad Bagher Ghalibaf, the most consequential institutional voice on that country's security architecture, spent Thursday and Friday publicly dismantling the 14-point U.S. diplomatic memorandum on social media. He didn't issue a formal statement through diplomatic channels. He posted memes. He coined a new word fusing the French term for fake with the name of the outlet that broke the peace deal story. He called the entire framework a psychological operation. Business Standard and First Post both confirmed his exact language on May 6th and 7th. This is not commentary from a fringe figure. This is the parliamentary speaker of a nation at the center of a live geopolitical conflict, publicly signaling that the peace framework his own foreign ministry is negotiating has no institutional backing on the security side. And silver closed the week above $80 anyway. That is the signal every holder needs to read before Monday morning. Not the headline. Not the diplomat's quote. The price action in the context of the headline, because that tells you something the daily chart alone cannot communicate. This is where it gets interesting. Over the past 6 months, this community has watched silver absorb ceasefire rallies, correction flushes, delivery shocks, and geopolitical reversals. Every single time, the physical buyers showed up. Every dip became a delivery window. Every paper-driven sell-off became an acquisition event. Friday's close above $80, while Iran's parliament speaker was calling American diplomacy a trust exercise gone wrong, is not a coincidence. It is the latest data point in a 6-month pattern that the vault numbers have been documenting session by session. Before markets reopen and before Monday delivers whatever it delivers, I want to walk you through the complete picture. The geopolitical layer, the COMEX structural layer, the global supply data, and 3 precise scenarios for what Monday actually looks like, mapped by probability. Drop a comment right now. Tell me what you hold and tell me silver's price when you are watching this. Everything recorded here is live as of Friday, May 8th, 2026. Let's build a real-time tracker together. Welcome to SilverDispatch. Let's start with Iran, because understanding the institutional split inside Tehran is the difference between reading Monday correctly and reacting emotionally to whatever headline opens the week. There are 2 separate figures currently managing Iran's public position on the U.S. diplomatic framework, and they are sending opposite signals simultaneously. The first is Foreign Minister Abbas Araghchi. Araghchi is operating through Pakistani mediators. He is the channel through which the 14-point U.S. memorandum was received, reviewed, and, according to reporting from W. Top and Hank Yore this week, acknowledged as an active discussion. Araghchi has not publicly rejected the framework. He is still at the table. That is the diplomatic signal the market has been pricing in. The second figure is Ghalibaf, Parliament Speaker, the IRGC's institutional anchor inside the legislative structure. The man who was posting social media mockery of American peace overtures while Araghchi was still in the room. Here is what that institutional split means in practical terms. The House of Saud analysis published this week framed it directly. Ghalibaf's public statements are not mixed messaging from a divided government. They are the structural authorization ceiling. Parliament and the IRGC are telling the foreign ministry in public what they have always communicated in private. No deal moves forward without their sign-off. And they are not signing. Any executable framework requires 3 separate institutional endorsements inside Iran. Foreign Ministry Agreement, parliamentary backing, IRGC operational consent. Araghchi can negotiate through the summer. Without Ghalibaf and the IRGC, there is no mechanism to execute what gets negotiated. What Ghalibaf did this week was make that veto architecture visible for the first time in an open forum. However, the Iranian side is only half the picture. Secretary of State Marco Rubio confirmed this week that Operation Epic Fury has concluded, but deliberately stopped short of declaring the conflict permanently closed. His framing to White House reporters was precise. We would prefer the path of peace. We would prefer, not secured, not guaranteed, preferred. That is the U.S. side issuing the same signal Ghalibaf issued from the Iranian side. Both parties from opposite positions are telling the market that this weekend is not the final chapter. And yet, silver closed above $80. That tells you something critical about which thesis is actually driving price right now. The geopolitical narrative in either direction is noise layered over a structural story that has been running underneath every headline since October. And that structural story lives not in diplomatic cables or social media posts, but in the vault. That's where we go next. Let's talk about the number that has not moved in the direction the paper market implied it should. Not once. not through any ceasefire, not through any diplomatic announcement, not through any social media post from any parliament speaker anywhere. The COMEX registered silver pool, the silver immediately available for physical delivery right now, stands at 79.8 million ounces as of Friday, May 8, 2026. That is registered inventory, not eligible, not awaiting reclassification, physically deliverable today. Now place that number next to the delivery record. Over the 5 complete months from December 2025 through April 2026, the COMEX futures settlement mechanism delivered approximately 202 million ounces of physical silver. December contributed 64.7 million ounces. January delivered 49.4 million. February came in at 25.2 million. March at 46.1 million. April at 16.6 million. May is still running. As of the most recent data from the tracking platforms, May has already added approximately 25 million ounces of delivery notices to that cumulative figure, bringing the 6-month running total to roughly 227 million ounces and climbing. Read those two figures together carefully. The market has settled 227 million ounces of physical silver across the past 6 months. The registered pool available to cover future settlement currently stands at 79.8 million ounces. That is nearly 3 full times the current deliverable pool, delivered in under 6 months. This is where it gets interesting. The registered pool has been in continuous structural decline since October 2025. It did not recover during the ceasefire period. It did not recover during Project Freedom. It did not recover during the April 30th delivery window, which this channel identified 48 hours before the market recognized it. And it has not recovered this week, while parliamentary mockery of American diplomacy was trending on social media. Why does this matter specifically going into this weekend? Because the mechanism is now predictable. When geopolitical noise pushes the paper price down on a Monday open, as it has done multiple times this year, physical buyers face a binary choice. They can wait and hope the discount holds, or they can stand for delivery at the compressed price and pull more metal from the registered pool. 6 months of data gives you the answer. Every margin flush, every ceasefire-driven correction, every Operation Focios headline, the physical buyers used every single one as a delivery window. The pool kept shrinking. The pattern is no longer ambiguous. Friday's close above $80 is not despite Galabaf's mockery. It is because the physical market has already rendered its verdict on what the vault data means. The paper mechanism can create price noise. The warehouse report records what actually happens afterward. 227 million ounces delivered. 79.8 million ounces remaining. Before I walk you through the 3 scenarios, let me anchor this in the broader structural picture, because this weekend is the right moment to zoom out. The World Silver Survey 2026, published by the Silver Institute in April, projects a global supply deficit of 46.3 million ounces for 2026 alone. This marks the 6th consecutive year that total global demand has exceeded total global supply. Since 2021, the cumulative drawdown from above-ground silver stocks has reached 762 million ounces. Silver consumed in solar panels, medical devices, and electronics is dispersed at the molecular level and is economically unrecoverable at any market price. Global mine production runs at roughly 820 to 840 million ounces per year. Replacing 762 million ounces would require redirecting the entire global mine supply away from all other uses for nearly a full year. That is a mathematical constraint, not a forecast. China imported 836 tons of physical silver in March 2026, the highest single-month import figure in recorded history, running 173% above the 10-year seasonal average for March. China has classified silver as a strategic material since January. Its domestic price is trading at a 12 to 17% premium above the international benchmark. Turkey imported 273 tons in January alone, nearly 1/3 of its entire 2025 annual total, in a single month, the highest monthly figure in Turkey's recorded history. The gold-to-silver ratio stands at approximately 57 to 58 to 1 against a long-term modern average of 70 to 1. JP Morgan's full-year 2026 silver forecast currently sits at $81 per ounce, meaning institutional projections now match the current paper price. Now the 3 Monday scenarios. Scenario 1. The weekend passes without a formal Iranian response. Status quo uncertainty holds. Silver opens in the $79 to $80 range. FX leaders confirmed this week that the $82 to $84 range is the next key technical resistance above the breakout. A clean Monday open holding above $80 through the first hour of New York trading confirms that level's conversion from resistance to support. This is the highest probability scenario. Scenario 2. New military activity resumes over the weekend, or Iran formally rejects the entire memorandum in an official statement. Oil reprices at the Sunday night futures open. Silver may dip toward the $76 to $78 range on the paper reaction. Watch the COMEX registered pool in Monday's warehouse report. If the pool drops further despite the paper sell-off, the physical thesis is intact. Scenario 3. Karachi submits a formal Iranian response through Pakistan and the US accepts it as the basis for a 30-day framework. This is the lowest probability scenario given Ghalibaf's public posture. However, a signed 30-day ceasefire does not refill the COMEX registered pool. It does not recover the 762 million ounce cumulative global deficit. It does not change China's domestic premium. Any Monday dip on a peace headline is, by the logic of the past 6 months, another physical delivery window. But there's a catch. All three scenarios place silver in the same structural position 60 days from now. The paths across the weekend differ. The vault direction does not. 4 numbers to watch. Brent crude at Sunday's 6 p.m. Eastern Open. The COMEX registered pool on Monday's warehouse report, currently 79.8 million ounces. The dollar index Monday morning. Every point below 100 increases purchasing power for Asian and European buyers. And the Shanghai opening premium, currently running 12 to 17% above the international benchmark. This is SilverDispatch. Everything sourced, everything verifiable. Tell me in the comments what you hold today's silver price and which Monday scenario you think plays out. Nothing here is financial advice. All analysis is based on publicly available data as of Friday, May 8, 2026. Verify everything independently. The vault doesn't post on social media. It just gets smaller.